When you're approved for an auto loan, the money is typically not handed to you cash in fist to swagger into a dealership like you're the Wolf of Wall Street. Here's the deal. Auto loans are structured extremely different than, say, a personal loan. So what usually happens is the lender pays the money directly to the dealership. The reason being cars are a pretty standard asset, and banks like the security of knowing exactly where their money is going. It's about as tied up and earmarked as funds can get. There are instances called direct auto loans, where you can get approval from a bank or credit union for a certain amount before you go shopping for your car. Even with this type of loan, the lender still typically pays the dealer directly after you've chosen your car. The key here is that the bank wants to have some control over the transaction to ensure that their loan is actually going for the asset they're financing. It's a collateral thing. They aren't in the business of just handing out stacks of cash that can be used for an impromptu trip to Vegas instead of the family minivan you initially had in mind. However, if you're talking about buying from a private seller, the process does get a bit closer to cash transaction. The bank might still cut a check directed to the seller rather than you having to withdraw a wad of cash. That's if you're even able to convince the bank to give you a loan for a private sale. It's trickier, and the terms are usually less favorable. Bottom line, you generally won't be able to withdraw your auto loan in cash to pay for a car. Besides, doing so would probably have you rehearsing a scene from an old-school heist movie, which is unnecessarily dramatic for a Wednesday afternoon car purchase. Just remember, Portland traffic might not be LA level, but it's no joke either. So whichever ride you pick with your auto loan, make sure it's something that can handle the occasional downpour and the whims of the I-5. Drive safely.